Hello, this is Andrew Westhof, Senior Loan Officer and owner of Homes Mortgage Lending, and this is your interest rate update for October 20th, 2022. So as you probably already know, interest rates have been on the rise for quite some time now. So I'll break down what they look like today. Most experts right now, so-called experts that follow mortgage interest rates, expect that interest rates are going to either creep higher or plane off for the rest of the year and likely into about the first half of next year before we start to see some relief. So if you are in the market, you certainly want to look at numbers for your price range and make sure that that's comfortable for you currently. Still with the anticipation that rates are going to drop and hopefully pretty significantly in the future, so we can refinance you and get you a lower interest rate and a lower payment. But there's no guarantee that that will happen, and if it does, we don't know when it will happen. So you certainly want to be comfortable with what the payments are currently. So before I jump into where rates are today, I do want to show you one piece of good news, is that existing home sales have fallen to a 10-year low as of September with the higher interest rates on mortgages. So the reason this is good news is because that means less competition for you. So being in the market this past spring and summer, as well as really for the past 6-7 years, demand has just steadily increased without supply increasing by much. If at all. So what we saw was multiple offers having to offer above asking price, waiving inspections, doing appraisal guarantees, doing a lot of things that were risky as a buyer. Most of those have gone away, and now there's just a lot less competition. Sometimes you can negotiate the sale of the home down. You can ask the seller to pay some closing costs to buy down your interest rate a little bit. So there's a lot more that you can do on the buy side as a buyer. And then the hope is that down the road you refinance and get your interest rate down as well, so that you kind of get the best of both worlds, just not all at once. So before I show you where my rates are, this is the Freddie Mac, just to kind of show you. This is the weekly Freddie Mac survey that surveys a lot of different credit unions, retail lenders, brokers, kind of the whole gambit. So this is to show you the general trend since last year around this time. So as you can kind of see, it's pretty much done nothing but go up with some slight dips in the short term. So just to give you a heads up, these interest rates are with quite a few points. So the rates that I'm going to show you are not with points. That's why my rates look like they're higher than what the national average is. My rates are very competitive compared to national average. So rates kind of everywhere aren't great right now. Mine tend to be better than most of the other local lenders, as well as national lenders. So if you are in the thinking about buying a home in the near future, I would love to be an option for you if you're buying in Michigan. I'll leave all my contact information in the video notes. So please feel free to reach out to me. I would be happy to assist. So without further ado, get to the nitty gritty of the high rates we're at right now, which today on a 30-year fixed conventional, 20% down, $250,000 purchase price, assuming 740 or above credit score on a single family primary residence with a 30-day lock period, we would be at 7.597%, which equates to 7.78% APR at Homes Mortgage Lending. So to give you an idea of what that looks like, here's the fee worksheet on that. Hypothetical numbers for property taxes and homeowners insurance, but just to give you an idea of what that payment would be, we'd be looking at just under $2,000 per month with those hypothetical numbers I use for taxes and insurance. And then this is based on Southeast Michigan. Again, this is going to be pretty rough, but ballpark for the total out-of-pocket, you'd be looking at about $62,000. Again, this is a rate that doesn't have any points. So if there were points, they would appear here in origination charges. That Freddie Mac number had 0.9 points, which is almost one full point on this loan size, would be $1,800 in costs. So that's where we're at today. Wish I had better news, wish I had better outlook. But again, the market, the home buying market is in a good spot right now. There's still a supply issue. Just the demand has decreased quite a bit because of mortgage rates increasing so substantially. So now is a good time to buy to not have a lot of competition. Bad time to buy based on interest rates, but good time to buy to get your offer accepted and not have to fight for every deal and really be able to shop around, find the home that you really love, and not have to pay way above what the price is. We haven't seen prices decrease a ton, in Southeast Michigan at least, if at all. But there are situations where homes are getting listed, and then that list price, there's some negotiation there. So again, hopefully this is helpful. If you like this video, I apologize if you've been watching these before. I haven't done these for a little bit because I had some technical difficulties, had to get a new camera, but now I have one, so I'm planning on doing these about every week. So if you want to keep an eye on what interest rates are doing and what the market's doing, please subscribe to the video, push the subscribe button, and whether you're going to view these in the future or not, please, if it was useful, please click the like button. That helps the YouTube algorithm so that other folks can find this video as well. And again, if you're in Michigan, I can lend anywhere in the state of Michigan. I'd love to throw my hat in the ring. I think you'll be happy with where my rates shake out to, as opposed to other competition, because I'm a local broker and I have very low overhead, so I'm able to pass some savings along to you. Thank you so much. Hopefully it was helpful, and you have a wonderful day and a wonderful weekend.